Hey guys, how we doing? Sherpa baby, Sherpa here. I've got the Sherpa's list ready for you guys. If you can see the smile on my face, that's because we absolutely crushed it yet again. Very happy with the results this week. The Sherpa's list is now coming out. Y'all know I had a 20% hedge. I did increase that position. I then sold out. I got out a little bit earlier yesterday and then a little bit earlier this morning. So now it's open season. I made some trades. I'll tell you what I'm looking at. I won't tell you exactly what they are, only because I think that there's more to come. And in light of the recent volatility, we're not going all the way in. So you're gonna have to be your own daddy on that, but there's some great opportunities out there. Let's do it. Let's get to it. Anybody new to the channel, go to everbullish.com. We're gonna click up in the hamburger on the right side. We're gonna go to the Sherpa's list. Forgot the song. Let's go. That hit right. That was good. So we're gonna go to the Sherpa's list. Come on, Sherpa's list. Where you at? There we are. We got it loaded up. It's the 15th. Just click on the post for me. God forbid I did it, guys. I made some notes. Because I want to be very clear here. We are telling the future. What we've been doing, and to all of those who've been following, we're not only learning how to throw a hedge on, how to go short, we're learning where to go short. If you look at the indices, the NASDAQ wasn't down very much. If you look at the sideways movement on the VIX, there's a reason I don't trade the VIX. We'll get into that one day. If we look at the S&P, if we look at the internationals, the micros, the commodities, everything, the DAL, it didn't move down that much. It moved sideways a lot. But when we look at small caps, they moved down huge. I made over 10% on that trade. I'm happy to say that's how you make money in a down market. And now, most importantly, this is how you kind of get that knife edge and get back in. You made 10%, market went down, presented opportunity. That's how leverage is created. And it's all about that live, laugh, leverage. I had to take the sign down because it kept falling. Live, laugh, leverage, baby. Ever bullish. Okay, where was I? We had our Little John going. We've got our Open Championship in the background. It's a great day to be trading. All right, here we go. Notes. I'm closing out the hedge with a very nice profit, over 10%. Anybody that followed, go ahead and close that if you're still holding. Now I'm buying some of those back into the stocks mentioned below. This is how you hedge. I'm going to be very clear on that. The information I'm giving you will make you hundreds of thousands of dollars if done correctly, depending upon the size of your account, but most of you will get there one day. I will not hesitate to get back into shorty next week, but I've closed it. It's time to start taking positions. LABU in the 50s, ripe. What did the kids say? Ripe AF. It's ripe as you know what. DAL is a new one on the list. UP is a new one on the list. DAL is in the Ever Bullish 1 portfolio. If you haven't bought it, get off the fence. I've been telling you about this. You can check the tape. You can see what I'm telling you to buy. You can see that it's going up against the market. The news comes out later. Up is Wheels Up. It's the company that flies and charters private jets for PGA tours, like what I got going on in the background, for private people, for professionals, for corporations that don't have private jets. The reopening, it's ripe. Airlines have become more lean throughout the coronavirus. Again, the reopening is big. And then Match.com, another reopening stock. Think about Match. Match has been around for, I don't know, probably over 20 years, 30 years. I don't know what it was before it was a website. But now that it's a website, now that it's constructed, now that it has its traffic, it has very little overhead, very little employees. A lot of it is going to be based on advertising. There's almost no expense, and you got a lot of young, horny, tied up people, or just people in general, ready to get out there, ready to go. And remember, I wrote an article in 2018 for my serious OG bulls back there in the woodlands about Match.com becoming popularized in China. Let's go ahead and use that. Take that for what you want. I've already used the word horny. I ain't going any further with that, but there's probably going to be some activity there. MTCH is Match.com. We'll keep it moving. SPCE. Trying not to toot my own horn here. What do we see? What do we use SPCE as? It's the dumb money, right? It's the guys that are following websites unlike this one that just aggregate you to team together, right? The meme stocks, the dumb money. SPCE was up 50% last week. It was down 35.8% as the making of this, and I'm looking right here at it. So this is to see where the dumb money is, and now I think that dumb money is going to come back off the table, kind of like my hypothesis before, and go into more reasonable stocks with reasonable opportunities, with reasonable expectations. Yeti, I have Yeti on there. It's an Austin company. Y'all know all about why I write it. If you want to go to the investing articles here on the website, after you look at this, you'll see my article on Yeti. I recommended it when it was at 42. I actually recommended it at 18 a couple years before that, but I had to shut the website down and reopen it. So I'm on with Yeti. I understand it. And look, we've got these guys sell $350 lawn chairs, and people can't get enough of it. And we're in a reopening, and it's the summertime, and they sell beverage products and everything else out there. Obviously, the coolers, and they have a following second only to, in my opinion, Lululemon. Yeti is the Lululemon of men's products. People are gonna buy it no matter what, just to look cool. All right, let's keep it going. Main watch list. You're going to see some normal names on here, but this is another two-lister, okay? Because remember, I've got the profits from this week to put back in. You probably do too. So let's get to it. FTCV, it's going to go down. It's going to go down. It's going to go down as an expression. It's going to go up as in practice. I mean that as like, let's go, let's get ready. Sorry for the strange language there. FTCV. This is the fintech. We're good on that. That's eToro, UWMC, $7.77. I like it. Mortgages, hyperinflation, all these other worries I don't necessarily see coming to fruition. Have undervalued these to be ripe. I like UWMC. I don't absolutely love it, only because I think that there's more attention going to other stocks. But for long-term holders, jump in. For traders, buy the warrants. HVBT, this one's still on my radar. It's a good blockchain technology company. Those companies aren't getting any credit right now. I don't mind it if you hold it. I don't know that I'd buy it yet, but I'm going to keep watching. Remember, this is my ready list. We've got the warrants back on there. We've got Avenger. I was really happy with Avenger. If you notice, biotechs took a huge hit. If you look at LABU dropping as much as it did, if you look at XBI dropping as much as it did, these are entry points for the ages. I love it. But Avenger only dropped, less than 10%, right? It's at $1. I think it's at $1.03 actually when I looked just a second ago. This is from the website. Shorty. Love Shorty. Y'all know it. This is how you do it. Picking up 10% in a down market and volatile time, telling you it's going to happen and then doing it, jumping back out. I'll buy it again on Monday if some, more, what hits the fan. I love it. SRTY, add that to your list always. Look at how it corresponds. Look at how it cooperates. Go to Stockmaster, put all these positions in. You'll figure out how to jump around, bounce around, and be in it all the time. Ethereum, I bought some Ethereum 2 days ago. I think it's down now. I still like it. I'm cool with it. XLRE, remember this is on the list only so we can see whether or not it's time to bite the bullet, be an asshole, and buy real estate stocks. I think it's an asshole move. I just absolutely hate the real estate sector in general, but look, we got to go where the money is. SPCE, there it is. It's on there to see where the dumb money is. SoFi, up. You're welcome on that one. SQQQ, that one's to see the correlations that we have there. SQQQ didn't even do that bad. That's the triple short on the NASDAQ. Up, there we are with up. Remember, I'm just putting the new stocks up first. Up, that's the Wheels Up Corporation I was talking about. The Jets, the company that flies private rich people all over the place. There's going to be a lot of trips to the Bahamas coming up. There's going to be a lot of 1%, 2%, even just high net worth people taking trips on jets. No one wants to get on an airplane right now. Are you freaking kidding me? You want to ride with all kinds of people after this coronavirus scare? For those even that are vaccinated, I prefer a jet over a regular flight. And a lot of this stuff is becoming more of life and death for a lot of people. Take that fear, use it, and go ahead and step on the neck of the industry by jumping on what's going to make money. Step on their neck. We got the golf going on. Match, talked about that. DAL, Delta Airlines, here's a plug. Ever bullish one portfolio. Go back and check the tape. About a month and a half ago, I made a video about rotating into Delta Airlines because it's the best airline company. It's the most lean. They have the best product. They're actually okay to fly with, in my opinion, as a guy that's terrified of flying. And they made a ton of money this year. Their earnings came out, or this past quarter, I should say. Delta Airlines up 3.5%. It's a boom. There's no reason not to have this in your portfolio. Your portfolio manager isn't doing this. They're not telling you why they're doing it if they are. But most importantly, I can tell you that they don't have they're not nimble enough. They have too many trades coming in and out. They can't just go ahead and take a direct, 10% slant into airlines. Are you kidding me? That would never fly. But you can, if you manage your own assets. Go buy the Ever Bullish One portfolio, the Ever Bullish Balanced portfolio, or the Ever Bullish Dividend portfolio, and get with it. Wells Fargo, would you ever think, could you believe the Sherpa's high on Wells Fargo? This is crazy. They're so cheap right now. They're making money right now. Their margins are intense right now. They're very undervalued in relation to other banks right now. Wells Fargo, you're going to pick up, what is it, a 5% dividend on that guy anyway. Not a full rotation to dividend players, but if I can get all those things moving in my favor, I'm going to do it. Edit, own it, trade it, own it. So this is a swing, this is a dip, this is a long-term hold. This is an innovative technology. This is going to become a serious bullish position for the future. If you like CRISPR, obviously you can have CRISPR too. I don't like it as much as I like Edit. Smarter people at Edit. Got Yeti on there. People's United Financial Trust is just a small cap play on the banks. Okay, Blink, we got that. We got Riot. I've already laid out the strategy for you too on that. Riot, Mara, and Hive are going to kind of all be when Bitcoin hits 38 to 40, which I expect it to do here in the next couple of months, if not weeks. We're going to be able to jump back into those and potentially use those for option trades. QuantumScape 23. We've been trading this thing all since I've been making videos. What's that, 5 months now? We've been trading this thing in and out of its range from 34 all the way down to 23. It's a good time to jump in right now, especially when tech stocks are getting crushed a little bit. Y'all can see the rest of this. Go to the website. Some of these are repeats from last week. Love MRO, love EOG. I love ERX right now. Personally bought some LABU this morning. Potentially going to buy some more LABU tomorrow. Arrival. We're just going to see till that gets down into the ride territory and jump back in. I did notice that Ride and Workhorse, by the way, were both up today. I like that. Bad tape, bad news. So much, they call it shit posting. So many bad articles that are really not considered current even, or going up to a lot of the people that are current investors in that, whether it's on real publications, Market Watch, even Wall Street Journal, or trash, organizations like Hindenburg and the other companies like that. Wolf Research, those type of things. So I do like Ride and I do like Workhorse right now, but I don't like it for a swing or a long term. I only like it for a dip. Get in and get out within a day or two. If you really want some juice, buy options on it. Palantir's on there, Nvidia's on there. Nvidia's going to be the one. This is going to hit 900 here in the next couple of months. You can buy it at 773 right now. Be careful about rates and keep the hedges on if you own this. Devon Energy, Fang Energy, MRO, y'all know I can read them all off here, right? I can keep going. So that's what we have. That's the recommended stocks for your watch list and your ready list. This is the actual watch list and ready list that I carry around with me as a professional day trader all the time. I'm giving it to you for free. If you followed any of my trades, you made a ton of money. Feel free to show your appreciation as always. Most importantly, spread the word to your friends and family. Let me see if I missed anything here. I didn't look at my notes. Oh, a couple updates. Kathy Wood, you probably noticed, she said she's out of China entirely. I've been telling you that all along. I don't like Chinese tech companies. If you're going to do it, only buy the major ones like Neo or Xpeng or potentially Alibaba or Baidu. But they've been fuzzy accounting. It's a cultural thing. Inside of Chinese accounting practices, which truly don't exist, it's okay to lie. That's going to provide massive opportunity if you're telling the truth. But I'm not just going to trust that. And that's not a xenophobic thing, obviously, if it did come off like that. BlackRock, one of my favorite, the best. The very, 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 very best research company in the world, BlackRock. A lot of things that they do I don't like, but I do like their stock. But most importantly, BlackRock's Larry Fink, their chief strategist. I admire the guy. I think he's a really intelligent guy. He's second to Kathy Wood in my opinion. But he talked about how inflation is not transitory. He shot down the Powell pop. That's what we're calling this jump up in stock prices, the Powell pop. Because stock prices are going up every time inflation numbers come out. Powell comes out and says, hey, relax, nothing to see here. Well, there is something to see there. I've told you all about this. It's not about whether or not the numbers are real or fake or what anybody says about it. It's what people feel about it. It's what motivates the average investor and the institutional investor. BlackRock says that it's not transitory. I don't think it's transitory. I don't know why we need some brilliant old man to tell us that, okay? Of course, inflation is not transitory. But the Fed is inflating their way out of this using individual stocks, and that's why stock selection matters. That's why I'm going to use this as a plug. Use your common sense. Use somebody else who has some great knowledge like myself. I consider myself one of the best. I have the best edge. Go to my website, buy one of my portfolios. You won't regret it. Stock selection, again, common sense on stock selection and knowing what motivates the average in retail and institutional investors. What's going to make you the money in this market? If you follow the shorty trade, even if you don't want to throw a donation to the ever bullish mission in the form of a cup of coffee, again, I love comments, I love likes, I love subscribes, but I like even more sharing with a friend, getting in on the action. You got to be your own daddy. The table is stacked against you. You need to learn this stuff because regulation, compression of cost in the investment industry will make it such that your broker doesn't care about you, even if they think you do, even if you think they do now. This is turning into an industry of 1/100ths of 1 penny on extremely expensive managed products that they are paid to sell you. Learn it. Do it. They're not hedging. I just hedged you. I gave you a 20% upside with almost no risk using shorty as one trade. More of that to come. That's why you follow the Sherpa baby. AFG, LFG, LGR, let's get rich. Thank you all for being bulls. Thank yourself because you're taking agency over your own investments. I'm out.